Today's video is all about profit, and when we talk about profit, we're buying at spot and going long. We're not shorting. How could you make any money out of a chart that looks like this? Stay tuned, I'm going to show you. It will blow your mind. Hi everyone, I'm Ken from CryptoTradingKS. My goal is to assist you to be more of a financial and emotional blessing to yourself and those you love. If you're an investor or a trader and would like to know where smart money is buying and selling, please subscribe. Let's run the numbers. Happy Mother's Day to all the mums out there. And this is a reminder to the kids out there, call your mum. Today's video is on profit. How can you profit in a red market, especially when you're on the wrong side of the trade? This is the performance of the US market over the past 7 days. We can see Google and Amazon have come up. Looking at the performance of the crypto market, it's a lot more red. In fact, some areas are really red. Look at Pepe, down 23.3%, and it was down a lot more than that. How could you possibly profit in a market like this? I'm going to show you, and I'm going to share a trade. Another way to visualize the market is through crypto bubbles, and just looking at the weekly analysis, we can see there's a lot of double-digit red. So how is it possible to make money in these markets? You can with the CTKS method. Looking at the 7-day greatest losers, Pepe taking out the #1 pole position, followed by Woo Network, Sui, Injective, Cake, Synthetics, and Clayton. Going the other way, the greatest gainers in the past 7 days, Carver, BSV, Rocket Pool, LDO, Leo, KuCoin Token, and Atom. Truly, the only way to profit in any financial market, be it stocks, be it commodities, be it Forex, be it crypto, be it anything else, is to get into synchronization with the market. Your synchronization factor is everything. Remember, you control the trade or investment, but the market controls the return. You can't force the market to give you a return. You have to move with the market. That's why synchronization and doing your daily three-dimensional risk management is so very, very important. We're entering a really choppy period of time. That's why I put out videos on how to help you to read the market and get into synchronization with it. If you're not in synchronization, you will lose money. If you are in synchronization, you will make money. It's literally that simple. A lot of people think that the market is all about taking from one person and giving to another. This is a very, very wrong way of thinking. The market simply transfers money from the desynchronized to the synchronized. If you're making money, you're synchronized, and if you're not, you're desynchronized. And that's as simple as it gets. But make sure you don't judge yourself too quickly on being desynchronized. I'm going to show you a trade today that requires the masterclass knowledge. LV21, Borsog Secrets, is a very, very powerful video, but to understand it, you must have all the knowledge that preceded it. Rule 621, buy on red, sell on green, or Borsog. We call Borsog the price eagle. Borsog is always swooping down to catch his or her prey, and then swooping back up to eat it. I'd like you to look at this particular price chart. Don't worry about what the price chart represents. Just look at the investor attention, the market action. We can see it was weakening. And then what do we see? It was weakening again. Over time, it weakened. And what am I doing? I'm borsogging into it. Ken, are you insane? Why are you getting on the right side of the percentage? You should be only buying as it goes up. And what did I do next? I bought again when it's climactically selling down. What on earth am I doing here? I must be gambling. And then I bought it again. And then, as price was going further down still, I bought again. You can see this is being called on the wrong side of the trade, but it is on the right side of the percentage. To do this, you must have knowledge. This is not gambling. This is the scientific analysis of a particular price pattern. It uses all the skill inside the masterclass. Many people ask, when do you cut a loser? Well, this is a loser, and this is a loser, and this is a loser, and this is a loser. Why didn't I cut them? Please let me know in the comments what your thoughts are on that. If you were faced with buying here expecting the price to go up, I didn't expect the price to go up. I expected the price to go down. But if you were expecting the price to go up here, of course you would feel like you needed to sell. Many people get freaked out of a trade because they see it going in the opposite direction to where they anticipate. We always have three-dimensional risk management, and we have Borsog, and we know the price is always moving in waves. So when price went down, that wasn't a problem. I wanted it. I wanted to get on the right side of the percentage, even though I was on the wrong side of the trade. Getting on the right side of the trade is not something that we care much about. We care about getting onto the right side of the percentage. It's a completely different way to think, and it's taught inside the masterclass. Let's continue on. Let's talk about psychology, and that's why it's so important to have a positive excellence mindset. You must conquer fear, or fear will conquer and destroy your account. When I was buying on the way down, I wasn't trying to pick the absolute bottoms. That's not what it's about. What it's about is consistently lowering your average buy price, but doing so in a very scientific way. If you bought here and you said, I expect the price to just shoot up, by the time it's got to here and you add again, by the time it's down here, you've probably sold at a loss. You would say, it's gone against me. I need to get out of here. And then that could be proven again. So what would you do? Where would you sell if you added here expecting it to go up, then you added again expecting it to go up, and it did for a little time, but then it went down? Would you sell? And what about if you added again and then it went down, and if you added again and it went down? Would you exit around that point, or would you seek to exit around here, or just very, very close, just to get out of it? What we do inside the CTKS Masterclass is we think very, very differently. I've been doing all of these videos to help people to prepare, to look for investor attention, to profit from depth charts, to understand liquidation data, the trading rules, top 5% strategy, pattern recognition, to understand where to buy and where to sell. I really urge you to go back and look through these videos. It's going to make the difference, and it's going to make a huge difference. Let's go forward with this particular trade. What do we see here? Price is starting to turn around. So do I start to buy more? No, I don't. I just set my sell levels and let the level fill. You'll notice that I bought 500, 500, 500, 500. So this is $2,000. Sold the first level at $698. And then did I add again? No, I was pretty happy. And then sold again and sold again. I took out all of these positions, so I was out of the market at this stage. Then, progressing on just a little bit, what happened after that? Well, it came down a little. Was I concerned about selling the exact top? No, I wasn't. I did a fairly reasonable job of doing it, but that's not what this is about. Not at all. What it's about is a reasonable rate of return. So the question is, what is the rate of return over this particular time period? Let's look into it, and I'll share my trade history with you. To profit, you must be on the right side of the percentage. It's literally that simple. You must be on the right side of the percentage. You can see here with this particular price chart, price was coming down and down and down, and look where I started to accumulate. Note the word accumulate. I didn't say buy or sell, I said accumulate because I was definitely accumulating. And then I pick reasonable targets to get out at. Did I put my sells up here? No, I didn't. Am I concerned the price could be passing over an area of resistance and about to get going again? No, I'm not. If you always anticipate the downside first, you're going to change your financial future. One thing that you can notice, I'm buying on red. It's getting red. That was very, very red. I got so excited when it got red. And look at this red. I got excited when it went red as well. One thing, people talk about doing live trading. Live trading is a little bit of a problem if you're trading under accumulation trading. What we can see here, the whole thing played out in around 2 days, 6 hours. Can you imagine being on a live session for 2 days and 6 hours? You just go to sleep. Let's have a look at the trade history. And what you can see here are those $500 amounts being laid down inside the market. 500, 500, 500. And then what do we see? That's the other 500. We see that 698. We see the 800. And we see the 1388. There are so many different ways to trade, but all of them have the same concept. Get on the right side of the percentage and know what you're doing. When we add up all the buy orders, they come to around 2,000. When we add up all the sell orders, they come to around 2,887. When we do the return on investment, we take that $1,900, or that $2,000, and the returned amount, $2,800, and we can see that it's a 44.35% return, or 36% return, over just a couple of days. We would say that's a little bit better than bank interest, and you can see the annualized return is a little bit eye-popping. A lot of people, when they get into trading and investing, they don't focus on their mindset. If you bought when there was a breakdown, expecting that there could be a fake out, and it didn't fake out, it kept on going down, you could get basically psychologically crowded out of this trade. You could push the sell button when it's coming down. Attitude is so incredibly important when it comes to trading and investing. If you've got the wrong attitude, if you've got a fearful attitude, what you would do is try to sell as quickly as possible, just probably making a small loss, or at best making a small gain. But that's not what we did here. We did something completely different. Having mastery over your fear is vitally important. Many times I get the question, Ken, why do you put money last in positive excellence? Aren't we here to make money? What's that about? You should be focusing on money. Well, the way to focus on money is to not focus on money. If I wasn't kind to myself as price was coming down, if I didn't have inner peace, if I caused outer conflict when price was coming down, I would psychologically give fear an edge over my trading and investment decisions. I don't give fear 1 inch. You could say that I was consistently losing money. Could I have bought down lower? Yes, of course. How can I do better next time? I'm always learning. That's what we have to do. What about persistence and commitment? You noticed I bought 4 times on the way down. I was persistent and I was very committed to both the downside and the upside. And I wasn't greedy about where I put my sell levels either. Taking reasonable profits is a kind of decency and integrity that you give to yourself. That requires strength and boundaries. You don't want to expect 1,000,000% return. You just won't get it. Money is made inside markets very, very differently. I'm not suggesting you get into Pepe. Pepe is a kind of bungee jumping and potentially without a rope as well, but it has massive investor attention. When I mean massive, I mean massive. If we actually have a look at Pepe, look how it's come down across the week. It looks like just a trivial thing, but that was a greater than 40% profit, even buying on the way down. And you might note, yesterday I mentioned nothing about Pepe, even though I'd already made really good returns selling that first spike there. If we look at the heat map and we go into the memes, Pepe, which is a meme coin, went down quite substantially. It really, really went down. So you can see already it doesn't matter if it's turned double-digit red. If you know what you're doing, you can make money. With this masterclass mindset and your CTKS method marked up chart, there's no telling what you can do inside financial markets. You can make them your own, but you must have the knowledge and you must have the patience. On top of that, you need to have that positive excellence mindset, or things can turn against you. And how do they turn against you? Your mind turns against you. The masterclass is full of rules obtained from tens of millions of either profits or losses inside financial markets. These rules have been paid with blood. I share them so that you can be more of a financial and emotional blessing to yourself and those you love. Rule 7 is incredibly important. Buying creates profits. You can see that where I bought dictated the profit that was made. It doesn't matter what the trade is doing, it matters where you buy. Every day I seek to drop gems that have taken a long time to learn, and these are all dependent on market conditions. A couple of days ago I said, Borsog, get ready, it's time to Borsog. And certain people did, but most people ran away from the market, because when it's red, you don't want to go near it. You think, oh, I'm taking a loss. I must have done something incorrectly. You didn't do anything incorrectly. It's just the market moving. Inside the masterclass is all the knowledge, and the method is about the smart money buy and sell levels. Currently, there's a foundation membership open on the CTKS Method service. If you go to ctksmethod.org, you'll find out all about that. And if you want the knowledge, because the knowledge is not in the service, the buy and sell levels are. If you want the knowledge, please check out the masterclass. The CTKS ambassadors can help you out. Apart from being fantastic people, the ambassadors can give you 80% off, so it's really worth reaching out to chat with them. Some people say, Ken, the masterclass is too expensive. Actually, it's far too cheap. If you think about this, in just a couple of days, you can make money like this. It's just outrageously cheap. The cost and price of knowledge is far cheaper than the cost and price of not knowing. When the markets are really red, a lot of people flee. They literally run out the door. That's why we must have daily positive affirmations for abundance, financial success, and happiness. These are just better habits, because better habits create a better life. Our habits simply dictate where we go in life. If you're not going in a direction that you want inside your own life, it's because of your habits. It's not because of you. If you change your habits, you will change your life. In the comments, please let me know about habits. What habits would you like to change? If you don't have the mindset, you will not stick with things. For example, you will not stick with the trade. You will not stick with the job. You won't stick with the relationship. You won't stick with the health plan. So many things require persistence, dedication, and commitment. On the 24th of this month, in about 10 days, we're going to celebrate our 2-year anniversary on YouTube. I reached out to our beloved global family and just asked the question, how could we do better? There were so many fantastic suggestions. I'd just like to thank everybody for putting their ideas forward. And welcome back, Michael. I always read every comment, and I make sure that I do something about it as well. What you say really matters to Kate and I. We're here to help you out as much as possible. If there is any way that we can do that more effectively, please reach out and just drop a comment and let us know. We're very interested to know. Thank you again for all your fantastic comments and for being here each and every day. You're just amazing people. To all the mums, have a great Mother's Day, and to everybody else, have a fantastic weekend. And Kate and I look forward to catching up with you again tomorrow. Bye for now.